Australia's financial regulators have warned that people are falling behind in mortgage repayments. Private equity group Bain bids for one of Australia's bigger retailers. And Apple unveils its AI product for smartphones. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 12th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, straight on to the big story this morning. Australia's financial regulators have warned that the share of borrowers falling behind on mortgage repayments has continued to rise as interest rates remain at decade-long highs.
The increase in financial hardship applications is also rising, though they are coming off a very low level, according to the Council of Financial Regulators. In its quarterly statement, the CFR said most borrowers have continued to meet their debt repayments. Now, the CFR is made up of the Reserve Bank, the Australian Securities and Investments Commission, the Australian Prudential Regulation Authority and Treasury. It very much understands what's going on in the market, and the fact that they have highlighted that the share of borrowers falling behind on mortgage repayments has increased does suggest that they are a little worried about it. The CFR also commented on lending to commercial real estate because bank exposures were relatively low, in part thanks to conservative lending practices in recent years, and because of the relatively strong financial positions of commercial property owners. The CFR was less worried, really, about the commercial real estate sector. The quarterly report had prompted Federal Treasurer Jim Chalmers to warn against austerity measures at a time of low economic growth and higher interest rates. He said last week's underwhelming GDP figures and the warning yesterday from the Council of Financial Regulators shows that it's important that the government provides some sort of cost of living relief.
Now, this part was fascinating, Sean. The report also talked about the problems in the cash delivery sector, where the near monopoly operator Armaguard is calling for assistance because sending trucks around the country is proving uneconomic.
It's a major challenge for the big banks, Aussie Post, the big retailers, the Reserve Bank, anyone who accepts cash. In 2010, Michael, around 60% of purchases were made in cash. Today, it's closer to 10%. Debit cards is actually where the real surge has been. It means that with so little cash around the place, it just isn't economic to deliver it across the country in those big Armaguard trucks anymore. It's a problem that's been going on for months, and the Council of Financial Regulators said it's working to ensure sustainable arrangements for cash distribution. If you dig a little deeper, the Reserve Bank chairs the working group on the future of cash distribution. Minutes from the last meeting show that the group is developing a new model to deliver cash, including coins. The fact that they're working on a new model suggests that the Armaguard delivery system isn't going to be around for that much longer. Now, I have no idea what that might be. It might involve Armaguard, obviously, but it doesn't look like there's the option anymore of having a private company not supported by the government or banks or those other organisations that need the delivery of cash. It's fascinating to watch that one.
Hopefully the new model involves tubes. You know, when they put the money into a tube, it goes shoop, and then it just disappears.
That'd be a very long tube though, wouldn't it?
Oh, yeah.
Getting from the Reserve Bank to Perth.
Yeah. I mean, Sean, I come up with the ideas. The execution of those ideas is really, I pass it on to someone else.
Yeah, right.
I say, hey, Reserve Bank, consider tubes. And then they'll do the feasibility study.
Yeah, not feasible. Off we go.
Oh, well, there you go. But at least it was a good idea. Shoop. Now, local markets, how did they perform yesterday?
The S&P ASX 200 closed down 1.3% to 7,755 points. That's where it went. It went down that time, not up.
Down the tube.
Yep. Basically retracing much of the surge from last Friday. It's all about fears that interest rates will remain high for longer, both here and in the United States. The banks were lower yesterday. National Australia Bank, ANZ and Westpac were all down around 1%. So too the iron ore miners. More on that shortly. Goodman, Telstra, Transurban, QBE, Macquarie Group, CSL, they all fell around 1% or more. Wesfarmers was the only top 20 stock to end the day higher. The local gold miners were particularly hard hit. The price of the precious metal dipped below $2,300 an ounce over the weekend. That came after those strong jobs figures in the US. Companies like West African Resources, Ramelius, they were both hit in that 7, 8, 9% range. Others like St Barbara, Bellevue Gold and Northern Star also dropped sharply.
What's happening in international markets?
Oil's trading higher with Brent back above $81 a barrel. Gold came back above that $2,300 an ounce figure. The Aussie dollar is trading around 66 US cents. The euro has been sold down against the US dollar and against the Aussie dollar after gains by far-right parties in European parliamentary elections over the weekend. But Michael, I thought we should have a look at the yen this morning, the Japanese yen.
Go on.
Japanese investors are taking advantage of the very, very weak yen and selling their holdings of offshore bonds, including Aussie bonds. In each of the last 6 months, Japanese investors have sold Aussie federal and state government bonds, according to RBC Markets. In fact, over the past 12 months, Japanese has sold a cumulative $12 billion of Australian credit, including bonds, taking advantage of the weak yen. The size of these purchases, $12 billion, highlights how far the Japanese yen has fallen. At its COVID low, one Aussie dollar would buy around 66 yen. Now, for one Aussie dollar, you get about 104 yen. It's weak against the US dollar, most other major currencies. The reason is that if you invest in the US, for example, at the moment, in a government bond, or here, in a government bond, you might get 4 or 5% return compared to almost zero in Japan. Now, let's bring this back to self-interest.
Whoa, hang on. Wait a second. I'm surprised by this. Oh, hang on. No, I'm not. It's Sean Aylmer. Please go on.
So Jackie and I are thinking of going to Japan later in the year.
Oh.
And you think you need to go to Japan for a long period because they're going to spend all that money. It's actually really quite cheap out there. There's some really, well, isn't that not cheap? That's not true. But there are some very, very good deals floating around at the moment, which actually got me into the whole idea of what's the yen worth. And it's fascinating that all these investors who have bought all these Aussie bonds are selling it. The yen is incredibly weak and we can get cheap holidays.
I'd like to congratulate you on concealing your self-interest so well within what is a genuinely interesting news story, Sean.
Yeah, yes. Thanks, Michael. Appreciate it.
I'm very good at this. Just a quick mention, Sean, you got a great interview coming up after the show today with Samantha McCulloch, the Chief Executive of the Australian Energy Producers, a supporter of this podcast.
Yes, so the energy producers look after the gas industries, the peak body for the gas industry, as well as other players. And our focus today is very much on gas and the need for gas to be a transition energy or energy source as we move to renewables. There's no argument about the need to move to renewables, but how we get there is really where the debate sits. And so we talked to her all about what the energy producers are doing to help that transition.
Yeah, it is a good interview. It's coming up after the show. Something else that's coming up after the show, Sean, kind of in a couple of hours' time really, is the Fear and Greed newsletter out mid-morning this morning.
Yeah.
Head along to fearandgreed.com.au right now. Don't delay. Put your email address in and you will get the newsletter when it drops in a few hours, full of your opinions, your views on a whole bunch of the big news stories of the week.
From markets to the economy to Donald Trump using TikTok.
Head along to fearandgreed.com.au so that you don't miss out. We'll be back in a moment with the rest of the day's business news. Sean, private equity group Bain Capital has made a $1.83 billion bid for Bapcor, the automotive parts retailer that owns Autobahn.
It also owns Auto Pro, Burson and Midas chains and has about 1,100 outlets selling car parts to mechanics and fans of motoring. The unsolicited conditional bid of $5.40 a share is a 24% premium to the group's share price when it closed last Friday, but well below its peak of $6.29 in April and more than $7 last year. Bapcor closed up 14% to $4.97 yesterday. The group has had a shocker. That's the only way to put it. It's downgraded its earnings outlook 3 times in the past year, most recently in May, when its disclosure sent its share price down 35% in one session. The group's been hit by the downturn in consumer confidence, as well as a bunch of management changes. The long-term CEO was forced out in May 2021. The next CEO left 2 years later. His successor changed his mind about taking the job 24 hours before he was meant to start. Anyway, its share price has been depressed. This bid has come in now, which looks like a pretty good premium to the closing price, 24%. However, it is still way below what the group was trading at the beginning of April.
Business confidence and investment has been one of the shining lights in the economy, Sean, but sentiment has turned negative and trading conditions and profitability have been weakening.
Business confidence is now negative and below the long run average, with retail, recreation and personal services and wholesale businesses all in the red. Confidence in finance, business and property as a group remains positive. Business conditions, as opposed to sentiment, has also slipped below the long run average, with forward orders deeply negative in retail, wholesale and construction. Many companies in those sectors just don't have a full calendar of work for the coming months. The National Australia Bank May Business Survey shows that the slowdown demonstrated in last week's March quarter economic growth data has very much continued into the current quarter. That's bad news. The survey gives great insight into different parts of the economy. There isn't much good news on the inflation front. Capacity utilisation remains above average, and there are still costs and price pressures within sectors. So while growth slowed, supply and demand isn't quite yet back in balance. And National Australia Bank Chief Economist Alan Oster reckons inflation will continue to moderate, but only gradually from here.
Sean, the iron ore miners, BHP, Fortescue Metals and Rio Tinto, all fell sharply yesterday as the commodity hit a 2-month low.
As we know, Fortescue Metals Group in particular is driven by iron ore prices, and given the ore is the biggest export of BHP and Rio Tinto as well, it has a fair influence in their share prices. After peaking above $140 a tonne earlier in the year, iron ore prices dropped below $100 a tonne briefly, then recovered to about $120 a tonne. Now it's back to around $105 a tonne. Generally, it rises and falls on expectations about what's happening in China, whether Beijing's going to stimulate the economy or save the property market or whatever. Iron ore, of course, is used in steel making. So if Beijing puts money into the economy, the manufacturers start producing more steel, good for iron ore. Chinese growth forecasts have actually been a little bit more upbeat recently. That helped the turnaround in ore prices. But sentiment has really shifted over the past fortnight. Nothing more than on Friday last week, when China's state planner issued a special action plan on conserving energy and reducing carbon emissions in the steel sector. That isn't good news for BHP, Fortescue Metals or Rio Tinto.
No, perhaps not. Now, Sean, opposition leader Peter Dutton yesterday said that the coalition won't put forward a new 2030 emissions reduction target until after the next election.
He refused to say if the coalition would produce a lower 2030 target than the government, even though over the weekend he said he'd go to the next election opposing the Albanese government's goal of decreasing carbon emissions by 43% compared to the 2005 baseline. He did say, this is Mr. Dutton, did say the Libs were committed to net zero by 2050. The fact that Mr. Dutton is equivocating on targets pretty much guarantees energy policy will be a fairly big election issue in the run-up to the next poll, Michael, which of course is due in less than 12 months.
Sean, what does the business community make of this? Because one of the many things that you've taught me on this podcast is how important certainty is for business. And one of the kind of the main features of this kind of net zero commitment by 2050 and the reduction by 2030 was at least there was a clearly defined kind of roadmap of what business needed to work towards. Does this add a bit more uncertainty into it for business?
I think it does. I think that most people think the government will win the next election, whenever that is. So it's probably not hugely worrying to business. But at the end of the day, they'd just prefer the two parties to agree on what's going to happen, particularly in these policy areas, which we measure in decades, not in months or even years, but in decades. So the whole idea of certainty around what we're going to require out of the energy companies, I think that is really critical to all business.
Okay, that makes sense. One last one before we get to international news. Queensland's budget was released yesterday, and there's plenty of big spending initiatives ahead of the state election in October.
Yeah, talking about polls, this one was just like a last-ditch effort to win over some support. The polls do not look good for the governing Labor government there. There's plenty of handouts in the budget announced yesterday and a freeze on government fees and charges. As a result, Queensland will swing back into debt next financial year. The handouts include a $1,000 energy rebate, cutting public transport costs to 50 cents, reducing car registration fees by 20%, and increasing the first home buyer stamp duty concession. Treasurer Cameron Dick said the government has made a deliberate choice to put the budget into deficit to help keep household budgets in balance. Nice line.
Yeah. All right. Turning to international news now, and Apple has taken the wraps off its long-awaited new artificial intelligence features for its devices. And Sean, the response was a little underwhelming.
Well, it was, but maybe that's slightly unfair because really it wasn't like they didn't quite do the big bang thing that Apple does or that everyone else has done. The centerpiece is a partnership with ChatGPT maker OpenAI and a new AI platform called Apple Intelligence. The group's worldwide developers conference also included updates to the iPhone maker's operating systems. Now, the AI technology will be available in smartphones. It'll help summarize text, create original images, and retrieve the most relevant data when users need it, according to Apple. The push also includes a revamped version of Siri. The partnership with OpenAI will let customers access ChatGPT via Siri at no extra cost. Apple Intelligence will begin rolling out later this year, but some features, including the ability for Siri to precisely control features within apps, they won't come until next year. It'll come out initially in English only. It's just I think it all sounds great. Actually, we need to talk to someone about this who's more au fait than I am, but it does all sound very good. It's just it wasn't really a big bang launch. I think most people expected something more.
Maybe that's because it's the developers conference rather than the kind of product launches,
It's not the marketing conference, yeah.
Yeah, indeed. Yeah. But you know what, Sean? If I could have, and I do hope the team at Apple are listening right now.
Yeah, I'm sure they are.
If Siri could do one thing that would make my life a little bit easier, it would read an email to you. Have you ever had that? Like where perhaps you're driving and you're waiting on an email and you're not going to pull over to check, and obviously you're not going to check it while you're driving, and you ask Siri, go, hey, can you read my emails? And they just kind of rattle off a list of the last 25, and the email that you need is in there. But if it actually then read the email to you, goodness me, that would save me a good 40 seconds about every 3 weeks.
I do all my texting while I'm driving. So that's true. I haven't thought about email.
Yes, just to clarify, you do that using Siri, right?
Using Siri, yeah, absolutely.
Yeah,
Use Siri for texts, absolutely. That's a great idea, Michael.
Yeah, I'm prepared to donate that one to Apple if they want to include it.
That's very big of you.
There you go. Sean, Singapore Airlines has offered $10,000 in compensation to passengers who sustained minor injuries during a flight that hit extreme turbulence last month.
The airline has also offered to individually discuss compensation for those who sustained more serious injuries. Those recovering from serious injury have been offered an advance payment of $25,000 to address their immediate needs. The airline also apologised for what it called the traumatic experience on board flight SQ321. Remember, last month, a 73-year-old British man died in the event. Several dozen of the 229 passengers and crew on board were severely hurt, ranging from spinal to skull injuries. All passengers aboard the ill-fated flight will receive a refund of their airfare, fair enough, as well as payouts of up to $900 for the delay to their journey in line with European Union rules. The payments are in addition to the $739 that the airline already paid out to passengers to cover initial expenses after the incident. Anyway, it looks like anyone who sustained a minor injury will end up with at least $10,000.
Okay, Sean, up next is the Fear and Greed Daily interview. You're speaking with Samantha McCulloch, Chief Executive of Australian Energy Producers.
All about using gas in the transition to renewables. It is a great chat. She certainly knows her stuff, Sam, and a lovely person to boot.
Yeah, absolutely. That is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you can sign up for today's Fear and Greed newsletter out mid-morning. And if you're looking for something else to listen to, why not give How Do They Afford That a go? There is a new episode of our sister podcast out every Wednesday. And today's episode, Sean, is about the top 10 financial mistakes to avoid, particularly in your 20s and 30s, but also into your 40s and 50s. But they are the ones that, like from kind of relying on toxic debt to ignoring your credit score early in life and kind of not taking advantage of the opportunities in your 20s and 30s to set yourself up for perhaps financial independence later in life. So it is a good one if you're in those age brackets.
Not so good for we oldies who just go and think missed opportunities left, right and centre here.
No, Sean, it's very much relevant to you. because you have kids in those age groups.
That just makes me even numb. None of my kids are in those age groups. Come on, give me a break.
Oh, some of them are nearing their 20s, right?
Well, that's true.
There you go. See?
Okay.
Vindication.
I'll be listening. Don't worry.
Oh, and you sound like you'll be happy to do it. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 12th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.